Yo, it's your boy Chike Investing back here with another episode. You guys are going to want to stay around for this one because we're going to be going over something very interesting today. So, daily NQ and ES reviews, that's what we do every single day. But in particular, here, we're going to be going over seek and destroy profiles, how to anticipate those, as well as how to anticipate that coupled with choppy conditions. As you can see, price action, did move a decent amount today, but as you can see, a lot of the moves were not really ideal at a certain point in time. So, we will go over that today and how you could have anticipated a day like this in the first place, given certain key conditions that were met. All right, so stick around for that. Before we get there, if you like what you're hearing so far, press that like button. All right, that's actually what the like button is for, because it kind of tells me that you like this video, so you could do that. And also, even if you don't like it, just press the like button too, because you're a good person. Or if you haven't decided if you liked it or not, just press it. You know what? Thank you so much for pressing that like button. Thank you. And thank you for subscribing too and pressing that notification bell. You're a really good person for that. All right. Now, also, leave a comment below if you have any questions along the way, as well as join my free Discord below, where we're going to be going over, daily bias, and as well as, sometimes live streams, as well as trades that I'm taking on a daily basis as well. Okay, so we'll go over that live. That'll be on my Discord. But as of now, let's get back to the daily review. Okay, and go over these conditions as always. All right. Well, first of all, actually, before we get there, we do the ICT 22 model on this channel. This is the flagship trading model, trading strategy from ICT. Okay, if you don't know what the ICT 22 model is, we'll be going over that in this video as well. So stick around. And where were the opportunities to make money, as there is every single day. Yes, I did say every single day. There's an ICT 22 model that could have made you a 1 to 3 setup every single day. Okay, if you're risking $500, you can make $1,500 every day, multiple times a day even. Okay, so let's go over those opportunities today. On the daily, we're gonna start with the daily, and we're gonna go all the way down to the 1 minute and do a quick review of each time frame. Okay, so I'm gonna put on the replay just so that we don't see. I'm gonna put on the replay just so that we can see. That's just one of my trading accounts. Yeah, it was a little down today, but that's okay. So on the daily, okay, on the daily, you have this particular candle. Very interesting, right? So we started off as if we were, well, actually, overnight, we actually were going up. So this candle started looking bullish in the morning, but then we wicked down lower, right, in a sort of seek and destroy condition. And we'll go over why that happened. And price came back up and closed ultimately with a slightly bullish candle after taking out the previous day high and closing back in the range. So this is clearly a day where price is going up and down. That's a seek and destroy profile, right? Where price is taking out the highest high, highest lows at all points in time. Okay, so why is it doing that? One of the major reasons why this happens, and this is stuff where you write down, right, is when you reach a higher time frame PD array of utmost significance. So look at this daily SIBI, right? We are now in this particular level. And think about how you react in fair value gaps, even on lower time frames. A lot of times you can interact with a fair value gap for multiple candles, right, without even expanding anywhere, right? Because you're filling in that inefficiency, right? It's kind of like rolling over with paint. A fair value gap is when you're kind of painting and you leave, broad strokes, and you need to fill those in and over a couple more rolls. That's kind of like how these candles are inside these higher time frame inefficiencies. So how does that inform your lower time frame trading? Price can be very choppy, or it can be going from end to end and range to range, right? Not really expanding anywhere, but just taking out short forms of liquidity, okay? So let's go over that a little bit more. So on the daily, we had that particular candle. We took out the previous day high, did not take out the previous day low. All right, we're still closing in the bottom half of this particular SIBI. We'll see how we continue to interact. If we expand away, then that SIBI will get respected, and I'll expect us to take out some of these LRRs down here, as well as maybe even revisit these levels if we can close through the weekly SIBI. Over here, this is the weekly fair value gap SIBI that has been inverted, that price actually found support on the upper half of. And so because we found support on the upper half of the weekly SIBI, what I would ideally like, especially given that it's an election year as well, even though we've already gone past the election, would like to see price still be bullish, right? And kind of sort through these SIBI levels, but it's going to be hard for us to do that, right? So we may find some very choppy seek and destroy profile conditions for the next couple of days, even up to a week or two, until we expand out of this range, right? So that's one thing. On the 4 hour, let's see what we had today, okay? On the 4 hour, overnight, we kind of consolidated for a while, okay, inside of this 4-hour fair value gap. So you see that we were stuck in that range pretty much overnight, failed to expand until about, the 9:30 opening range in the morning, where price, well, actually, around this candle, this 6 a.m. candle right here, is where we actually expanded and took out these LRRs and hit our buy side liquidity target. So if you were looking for longs, it would have been hard to kind of catch any more of those because we've taken out a lot of the liquidity targets for the day. Price came back in to the range and closed in this 4-hour BISI again, already telling you that today is probably going to be a pretty either choppy day, or we're just going to be going to the extreme ends of the range, not really ranging anywhere. It's basically telling you with this candle right here that price is not really looking to expand anywhere. So it's either going to be seek and destroy, or it's going to be very, very choppy. Okay, or it could be both, like it was today at a certain point. So price came back in. It took out London lows, right, and took out this low from yesterday PM as well. And then price found support on this 4-hour BISI still, right? It closed on it. And when I'm seeing this, and I'm like, okay, it can't get it, it's closing on the consequent encroachment and starts to expand away. That's a strong sign that price is using that as support, and it's going to be bullish for the rest of the session. And so price started going upwards. Later parts of AM, right, at that around that 10 a.m. reversal, 11 a.m. reversal time, and then in the afternoon, early afternoon, price started expanding, but then in late afternoon, we came back into the range. And what's very interesting here is that we expanded above this wick, but we came back down and we closed on this wick, right? Wick's consequent encroachment. We expand past the wick's consequent encroachment, but we came back and closed back down on it. So I want to see on the next couple of candles, do we come back down and close through it again and then go lower, or do we find support on this and go higher? On the 1 hour, and why is it important that we're doing all this? When you understand what's going on the 4 hour and the 1 hour, it'll help you get your bias right, and you'll be able to pick out way more profitable trades. You'll feel more confident entering them, and you can hold them for much longer, right? Because you know that the 4 hours got to get somewhere, so that means the 5 minutes got to get somewhere. That means the 1 minute's got to get somewhere, right? Okay, so on the 1 hour, this is how you could have known we had a seek and destroy profile coming. This is the Asian range right here, 8 p.m. to 12 a.m. Right? This is the Asian high, Asian low right here. London takes out the Asian high and it takes out the Asian low right here, right? So you see this. Whenever you see that, it is reasonable to expect that we could have a seek and destroy profile. So going into pre-market, we're rising. We take out all this liquidity, right? So you couldn't catch any longs here, unfortunately. Post 9:30, right? It's already been taken. Price then reacts off this 4-hour CB level. This is a 4-hour CB level right here. Right, so on the 4-hour, this CB right here. That's why you always want to have these PD arrays marked on your charts to see where price could be reacting from. So you're not just surprised when price comes back down. We hit that 4-hour CB, which is a very strong PD array. This is the daily CB's constant encroachment plus the previous day high. You can see that we're finding resistance around that area, closing around that area on the 1 hour. Price does not. Price fails to get above that 4-hour. We come back down into the range, close below these 1 hour fair value gaps, right? Telling you that we're not really that bullish anymore, and then we end up taking out the London low and yesterday's PM low as well. Okay, but then how you could tell that we're probably going to be bullish for the rest of the day, we're going to have an intraday reversal. Is one, it's a seek and destroy profile, right? So now that we've taken out both, when you see this, and it could be seek and destroy. It's not taking out a high, and then it took out the low, right? Like it's basically telling you that okay, if we come back up into the range, we're probably going to take out this high, or at least come back into equilibrium of this range or the upper quadrant of this range, because that's what seek and destroy does: up, down, up, right? So it's good to have these market contexts because it'll help you decide what your bias is going to be, especially when you see it close on the 4-hour fair value gap consequent encroachment like this, and then start to have a rejection candle higher after taking out a key low, forming a rejection block, telling you price is probably going to reverse. I'll be right back, guys. We keep going higher, right, until we get to the next higher time frame key level, right? So we failed to take out this high, and that's purely because this 4-hour fair value gap was in the way, right? Which is very strong. 4-hour PD arrays are very strong intraday, which you always want to have them, and the daily on your chart, the daily ones on your chart. that 4 hour is gonna be really 4 hour PDRA is gonna be really strong for intraday price action. So see how like the 1 hour is closing on this 4 hour fair value gap right here that I mentioned before, as well as how we couldn't make it above this 4 hour fair value gap in the morning. It's probably gonna be hard for us to make it above that in the PM unless we just skyrocket through. If we're like hovering around there, we're probably going to come back into the range, which is something that, you know, I should have thought about a little bit more when I was taking a trade this afternoon. That I was in profit. I caught 2 profitable 22 models, but then they ended up coming back and break even because of this particular 4 hour fair value gap that was in the way. So we'll go over those trades a little bit. There wasn't really anything this AM, but we'll go over those trades. And so when did that reversal happen? Happened at 10 a.m. And then we reached the top of the range here by about 3 p.m. and came back into the range and closed basically in this 1 hour BSI. All right. On the 15-minute, what do we have? So you see we rise higher, and then around 9:30 open, we close in the bottom half of this 4 hour SIBI, skyrocket lower, taking out all these LRRs, and then finally taking out the London low at 10 a.m. Wicks back in the range. It comes back here and finds resistance on this 15-minute inversion fair value gap, right? So you can see that. I thought you always want to look to the left. When you're on this side of the curve, look to the left to see if there's anything that could be in your way. Plus also on the 1 hour, we had this fair value gap in the way as well. So keep that in mind. So we had these 2 inversion fair value gaps in the way. So price would really need to skyrocket through it. It can't be hanging around there for it to actually be turning bullish and be confident about that. So you can see it returns the other way and ends up taking out this low, forms a low, right, below all these LRRs as well, taking out all these LRR moves, and then coming back into this 15-minute bullish order block, okay? And then reverses higher, starting around 10:30 a.m., right? So between the 10 to 11 a.m. hour, a lot of times you can see a New York reversal, you know, a retracement or a New York reversal. That's a key reversal time. So if you see price starting to break market structure higher, you can trust that if it's after 10 or, you know, or around 11 a.m. Price starts going higher, right? Leaves this 15-minute fair value gap open because it's now closed above these inversion fair value gaps, right? So price is failing to get back down through here, okay? We come back higher and revisit the opening range gap from this morning, as well as the one from, I believe, what was this from? A couple days ago. It's an opening range gap that has not been filled yet. And that's why I still have it on my chart. I believe that's from, yeah, this is from last week, Friday. So last week's Friday opening range gap is still open, right? If you don't know what opening range gap is, it's just the difference between yesterday's close on RTH plus today's open, right? So those are also gaps, and price will typically fill it. So you can see that immediately got filled at the 9:30 open. Right? There's a 70% chance that in the first 30 minutes that the opening range gap gets filled. And so price comes back higher, rejects from that ORG and this 15-minute fair value gap, SIBI nested in it, plus this breaker, and comes back and touches these inversion fair value gaps, but then wicks on the upper half of it and continues to go higher. Right? Why is it going higher? Because we're in that seek and destroy profile, remember? And plus we have that 4 hour BSI at the bottom here that we're reacting from, which I'm not sure is not why it's not showing. Still, I want to have that PDF in my chart. All right, so price comes and also touches the top of this 4 hour fair value gap, continues to go higher. And then we come, and by about 1 o'clock, we are now consolidating. Like, look how the price action just starts to become crap in this PM session. Why does that happen? Right? So this is the choppy conditions I'm talking about. So you're in a seek and destroy profile, which means that price can already be very, you know, like eager to take out certain lengths of liquidity, but also you have choppy conditions in the PM. Why is that? I mean, look at how much we moved in the AM, right? Like a large move pre-market, large move, in New York, plus going into lunch, and plus in the reversal after 10:30 going into lunch, we moved a lot. There's going to be some consolidation in some session. And when you see a lot of movement like this in the AM, right, we've gone up, down, up. Like once you've seen a lot of movement like that, you shouldn't really be executing on any new trades in the 1 p.m. No matter how good they look. Like especially in such a premium. If you're bullish, like you should just be done for the day. Just go and close your charts. Go have fun. Go do something else, right? Because you want to be trading in low resistance conditions. This is exactly when high resistance conditions can happen once you've had a lot of movement, right? And look at how once we hit that 1 p.m. to 1:30 time, price just completely falls off in precision, right? And so timing your times a day to trade is also beneficial. So on the 5-minute, you see this big wick up, and then we close down. We close below the opening range gap, constant encroachment, fill in the whole opening range gap, taking out tons of liquidity pools, and then we come back to this 5-minute breaker, right? And then we end up going lower, right? This could have been a kind of valid 22 model on the 5-minute. So let's go over what the 22 model is. Okay, so the 22 model, for those who don't know, high, low, higher high. There has to be a fair value gap here to show displacement, right? What's the fair value gap? The gap between, there's 3 candles, 1 candle, 2, 3. This wick and this wick right here, there's just body. That's a fair value gap, okay? Fair value gap right here, fair value gap right here. So there has to be a fair value gap because when you see those fair value gaps, you can see there's displacement after, right? So that shows that price is ready to go somewhere. Right, comes back down into a discount array. Ideally, comes back down into the fair value gap. Does not always get there. I have videos on why it doesn't always get there. You just have to keep watching the series, and then price goes higher. That's a 22 model. Now, price could be either on a downtrend and then we reverse after hitting a PD array, or it could be on an uptrend, have a short-term purge in liquidity, break market structure, and go higher. All right, so that's a 22 model right there. We'll go over what those examples are. In fact, we'll go over one right now. So you see this high, this low, this high, right? So purge liquidity right here. Break of market structure. So you can even use this high, this low, this move up here, break of market structure, fair value gap. That's the 22 model. Where would your stop be? Where would your entry be first? Your entry is on the first presented fair value gap, but because it's such a big move, a lot of times I don't want to just enter on that fair value gap. I want to enter at equilibrium and wait for it to come back into a discount. Where can your stop be? Stop is at this breaker, high of that. Price should not go above that breaker, right? Plus you have all these inversion fair value gaps right here. You have this inversion fair value gap. Price should be held above those levels. What are you aiming for? London low. You know this is a seek and destroy profile. So we've taken out this high. We're probably coming back to the low of today's session, right? Which is here. That's the seek and destroy. So you can aim for there, and you can be very confident that price is going to just literally liquidate down all the way to that low. That's a really good 22 model right there. Okay, unfortunately, I was looking at the 5-minute and I was in a meeting, so I couldn't see it. That's a good 22 model right there. There's a second 22 model right here as well on the way back up. So now that you know we've taken out the London low, we've taken out all these liquidity targets over here, we're reacting from a 15-minute fair value gap. Since it's seek and destroy, you can anticipate us to at least come back up to equilibrium, but then probably to the other end of the range, just like we did here. And so where do you enter here? So you see a low, high, lower low, a break of market structure. And you can enter on this fair value gap. You could enter on this high right here, but because we've moved so much, I'd like to see us at least come to this fair value gap first for an entry. Now, yeah, I know this was a large movement. And so price could have come back to equilibrium, but because ES was moving so much faster, I didn't anticipate that price would be strong enough or would be bearish enough to come back down. Thought price would just keep moving. So where could your stop be? Your stop could be somewhere around here, right? So below the constant encroachment of this second fair value gap, because you have these two fair value gaps, you have this inversion, and you're below the constant encroachment of that inversion, but this is the BPR as well. Plus you have this wick and this entire breaker candle. So you have at least 3 PD arrays. What do you aim for? You can aim for this high, right? But take out most of your trade once you get to this 4-hour SIBI level. Because notice we couldn't get it past it in the AM session, so you could be getting most of it out of here, okay? So that is the 5-minute 22 models for the day. Price ended up reversing around 10:30. Broke market structure, came back to fair value gap, went higher, came back down and touched this 15-minute and 1-hour inversion fair value gaps. Coming on the consequent encroachment right there, and the price continued higher. Took out short-term forms of liquidity right here, some LRRs after, right? So it was started consolidating upwards. Price took out this high right here on this 2 p.m. candle. And then starting at 2 p.m., we reversed and come back into this 1-hour fair value gap that presented itself on the way up, taking out this key liquidity, but then creating a bullish order block that you could have, if you're an order block trader, could use this to maybe target this high or at least this 4-hour SIBI that we're coming back to Price ends up getting back there by about 3:15 and then sells off for the rest of the day. Okay. And completely filling in today's opening range gap. On the 1 minute, what do you have? We trickle higher, 9:30, blast lower, okay? Come back up higher to that 5-minute breaker. We'll keep that as a breaker. On the 5-minute, comes back to that 5-minute breaker. We sell off, taking out these relatively equal lows, taking out London low and London relatively equal lows as well. Once we do that, we come back higher to that 1 minute and 15-minute inversion fair value gap. Why do we sell off again? We've not finished reaching our final targets. Low hanging fruit liquidity over here on the left. Always only look for reversals, right? So I actually took a 22 model long right here. I think I got London low, but I have to continue to remind myself. There's no point in buying if you're not ready to reverse, right? So we weren't ready to reverse because we had all the liquidity below here. Plus, we had these relatively equal lows. Like, I don't like to see that, right? So price took that out. We did get this relatively equal lows right here, but price had already taken out all the things that it needed to, so it kept going higher. Let's go back to this 22 model for a second. I know I'm like going all over the place, but there's a low right here, high right here, low. Breaker market structure, fair value gaps. I entered here on this candle at 10:19 a.m. Once price started expanding away like that, just given the context of today and given all these high resistance stuff right here, I want to see price smash through that. I don't want to see it respecting that and coming lower. So I move my stop right here. So that means, like, I would have had a very tiny loss, right? So very tiny loss, right? The best 22 models is when it touches that fair value gap and it starts to move away, it just moves away. It does not come back to it. Once you see it come back to it like that, you should just get out of the trade. It's not high. You should wait for 22 models that are just easy, like that, just literally just blast off, right? And very low probability for it to actually win if it returns back there. So price makes a low here and then breaks market structure higher. No 22 model there. There was one 22 model I would say that was in this range. So I mean, this low, this high, and this low. But then, it took all the way till this move to break this high plus the fair value gap. And, I just didn't want to see that, right? Like, I want to see a very clean, obvious 22 model in one run. So I didn't take that. But there was one, right? And plus, like, we've had a run pre the 11 a.m. like our time or pre 11:30. At 11:30, we can start to come back on some of that move that we had pre 11:30, right? So the most recent move. So this move came back and it took out, this low and it retraced back into the range. And so that's very characteristic of after 11:30. And then around 11:55 here, macro into 12:10, we have this low get purged. We find support on this 15-minute inversion fair value gap and then rise higher and then break market structure with this 22 model. Low, high, low, 22 model formation around that 12:10 macro time. Come back into this tiny fair value gap right here. And then we continue to rise higher. Makes sense because we're bullish, right? Because it's seeking destroy profile, right? So price ends up rising much higher. Come back to the previous day high. And then now we're kicking off the PM session. After a very large AM session, look at how just the precision starts to fall off. So price starts to consolidate. Consolidates. We do come back into this 1 hour BISI, right? After taking out all this liquidity below here. And then form a 22 model here. Low, high, low. And then breaker market structure for value gaps. I entered on this for value gap. Stop was below this breaker candle right here. And we went higher, but then once price came back lower, I stopped out at break even, which is okay because you want to see 22 models that just expand away, right? So I don't want deep retracements like this. So I put my stop to break even right here. I wanted to see it continue to expand and respect this BISI right here. I wanted to see it respect this BISI. Price started breaking through that. Well, I got out at break even. Price formed another 22 model on the 2-minute. Right about here, because this low took out this low, bigger market structure above this high, fair value gap. My entry was right here. Stop was below this breaker candle right here, and aiming higher for 1 to 3. But once we got to the 4 hour fair value gap, we reversed higher and we reversed and hit my break even. Now, I should have gotten out my trade around this 4 hour fair value gap. When I started seeing it break down like this, like I should have taken out at least 80% of my trade. Because we know that 4-hour fair value gap was respected early in the morning. It's done a lot today. We're obviously in consolidating environments now in the PM on higher time frames. 318. I mean, we could reverse back into the range. So, that was a mistake on my part, but you live and you learn. Okay, so that has been today's lesson. Hopefully this was helpful. And remember to like and subscribe and comment anything below. Join our free Discord, and peace and love. Catch you guys in the next video.